The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Darrell Martin.
Alrighty, folks, we're going back here to the Diagnostic Trading Hour. And let's check out where the markets are at right now. We got the S&P is up 2.25 points. We have the Russell is up 0.10. NASDAQ is down 18 points on the day with the Dow moving up 61 points right now. Going into our copper metal markets here. We got copper right now. It's pretty flat on the day. Gold is down 6 points. Silver is down a little over 0.5%. Hopping into the energy markets, we have natural gas is currently up about 1%, and we have oil is up 3%. So some monster awesome moves in oil today. Going on over to the FX markets, we got pound dollar is up 111 pips. So some huge moves there. We got euro dollar up 92. We got dollar franc down 59. US yen down 65. Euro yen up 34. Euro pound pretty flat on the day. Aussie yen down 14, Aussie dollar up 42. Bonds up big time. 3-year bonds up 1.1%, 1.17% on the day. So a big move in the bond market. And the dollar index moving on down at nearly 1% today. So King dollar getting a little weaker, but the bonds going higher at the same time. The yield going up. And we're seeing dollar be stronger on, a couple pairs and weaker on a couple others. But overall, dollar is getting weaker today. Hopping on into the pound yen. On the pound yen, it is currently up just 13 pips. Pretty small move for the pound yen today. Euro franc is up 35. Pound franc is up 52. Dollar CAD down big, 106 pips on the day. And we definitely have some more news in our forecast. Going to be driving some more dollar CAD moves like we've been having thus far. Let me go ahead and open up. Give me 1 second here. I will pull up another chart on here, but I want to go over your top news stories for today. And once that's up, there we go. Okay, so a few things going on. ETFs are starting to see some of the biggest outflows they've seen in the last 15 months, oil ETFs. So people are starting to get out of a bunch of those ETFs. Big exodus is starting to happen right now. Oil is rising. I guess we'll just going straight into it, but a lot of people are just pouring out of them. But I mean, sort of funny because they're doing it right as oil is like starting to fly back up. I think that happens a lot, right? So they're all hopping out because they're like, oh, I just can't take this ETF dropping anymore right as oil starts flying back up. Anyways, oil is rising as output drops and Middle East tension rises. Let's go ahead and take a look at that real quick. Got quite a bit going on today with that. But let's see here. So let me pull up the oil chart I had up a few minutes ago. And I'll just flip this one back over to oil. We'll do that. All right. So anyways, as all these Middle East tensions are going up, but everything that's happening right now, that itself is starting to drive the price of oil. Let's see here, let me just remove and then add back. There we go. But we got some pretty nice moves there. Let's see, what else do we have going on? I don't know why I'm having an issue. Let me check my instrument manager 1 second. I wanted to show you the deviation levels here and where we're at exactly on the day because it's a pretty big move day. Hold on, I will get that updated. See if we rolled over already, or I just might need to do a reboot on the system. That happens. All right, so over here on CL, Yeah, I'm on the right contract. Everything's right. Okay. I'll just do a reboot here during commercial break on my platform to get that fixed up. Okay. We'll go ahead and hop on. We'll come back to oil in a little bit. European stocks and mostly negative on the day. So, overall there, a lot of times that can be a precursor to us ending negative on the day. We'll see if that plays out. But going on in, Eurozone misses, output, and CPI is down a little bit as well. So major European markets, Europe global equity markets, and you can see basically the percentage down moves by category there. So I got you updated on the European side. Pound yen rebounding from the 6-month lows and erases a bunch of their losses. So pound yen is a fun instrument to trade. And so I sort of like it when it's making new lows. But when it erased those lows, bouncing up pretty big. Right there, just like flying off of the bottom of that. Let me load up this Forex data chart. I'll show you. And let you see exactly what I'm talking about. But very impressive move and just a great instrument to trade overall. Like I said, it's one of my favorite instruments. It's pound yen because you get the good volatility of the pound and the good volatility of the yen, especially whenever like yen is doing something, because pound's always moving pretty good. Okay. So, or not always, but I mean, most of the time is actually a pretty great pair all in itself. But whenever, Japan's doing any kind of monetary policy stuff or whatever, I mean, that really can just basically adds volatility to volatility on top of it and makes it even better. And I don't know what is going on. It's like an unresponsive page. A couple things there. Probably just need to reboot. All right. Dollar is sliding on retail sales. Disappointing when euro and gold outflows. So dollar going on down off the retail sales numbers. Not quite meeting investors' expectations. All right. So we got a few rolls that are happening this weekend. Okay. So a few rolls that are happening this weekend that you want to make sure that you have, ready and in your arsenal to go. One of the things is after the close on Friday, we're going to be looking for if you're Nadex trading. Okay. If you're Nadex trading. So if you're trading on Nadex, then what you're going to want to do is you're going to want to go in and you're going to switch over 3 contracts this weekend. What 3 contracts? Okay, well, if you have the scanner, it's helpful, but if you don't, then you'll see it whenever it pops up on the weekend or, right here on the radio show. You're going to be looking at corn, you're going to be looking at soybeans, you're going to be looking at oil. Okay, so you're going to be rolling over those contracts to the new month at the end of the week. Now, we have that built in for you in the scanner, okay, because we have a little information section that has a calendar, and it shows you. So really Thursday at 6 p.m., we're going to be rolling over corn and soybeans, all right? So Thursday at 6 p.m., rolling over corn and soybeans. And then Friday, basically after the close, we'll be rolling over crude oil. So whatever date shown here, it happens at 6 p.m. the night before, all right? So at 6 p.m. the night before is when we're actually doing that roll. So make sure you get those updated. Of course, the following week we'll have the natural gas rollover as well. Now, you need to be aware of Nadex rolling versus the CME rolling. Some of y'all are trading Nadex. Some of y'all are trading the CME. Some of you are doing a little bit of both. To know CME, you need to look at the actual, are the traders rolling? Because Nadex will stamp, say roll, boom. All contracts will say that month in them whenever you use them. The CME, they may announce a roll date, but it doesn't matter until the traders themselves choose to roll. So I just watch the volume. It's pretty simple. So if I go over to cmegroup.com, I go to trading, I go to energy, and I scroll down a little bit to crude oil futures. Okay. Click on quotes, and I'll see where the volume is. Right now, the volume is on May. But you can see June is quickly picking up, 106,000 contracts versus 245,000. This number will get larger and larger and larger, okay? When it exceeds May, that's when the roll has officially happened, okay? So when it exceeds May, then that's when it officially happens. So I usually stay, if I'm trading futures, I just stay on the May contract until I see June actually get larger. I don't worry about if it's Thursday's the official roll date because you get some announcement in your platform or from your broker. When the volume's higher, I'll move. Okay? So, often results in me moving like on a Monday because like Thursday, like I say, if it's a Thursday roll day, like often you'll start seeing the volume will get, pretty on par. Friday, it sort of start off slow, but then it'll like usually exceed it by the end of the day. I'm like, okay, now it's exceeded. The day's over. Boom, let's go ahead and flip over. Okay? So usually I end up like rolling over like on Mondays whenever there's like a Thursday roll. But if you want to get real fast, you can do it. I don't like doing it on the day of roll. And usually I don't even worry about it the Friday after. Okay? But, you can go either way you want to. But if you're trading Nadex, you roll 6 p.m. before that date. Okay? So like on Friday at 6 p.m., then update. When I say roll, it means update your chart. If you're using Thinkorswim, they use an auto roll feature, but they're not always right. So you need to be able to enter your month codes. What month code should it be? Okay, so like on Thinkorswim, it'd be like /CLM5. So it's a roll to the June 2015 future. If you're in Ninja, you need to go into your instrument manager and update it from CL05-15 to CL06-15. Okay? So, those are basically the two main formats of either using a numeric or a letter-based month symbol. And that's how roll works. While talking about CME, let's go in and let's look at some of the volatility indices. Let's talk about those for just a second. That's really not CME related, but just in the sense of, while we're, over there on TOS, we can go in and we can pull up, some of the volatility indices. We got the VIX, checking this out right now. And I've went over this before on one of my previous radio shows. I went in and talked about all the different little volatility indices they got. And it's pretty easy. You can go in here and click on here and click, remember, the volatility indices are on the CBOE. They're not on CME. But let's see here. If I go to look up, and I can just type in the word volatility. So, volatility. All right. And then I can say index. Let's see if they label them all the same. And they're really not getting me just index. Well, I got one of them on there. They give me the RVX. Okay. So there's the Russell Volatility Index. And I need to put it on a daily chart. Let's see, we'll go back. There's our Russell Volatility Index. We'll sort of see where the IV is, the implied volatility is. I can go over here to OVX. You're an oil trader. Okay. Maybe you're a gold trader. GVX for the gold volatility index. And I'll tell you how to use these a little bit more when we get back.
Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his Diagnostic Box Spread Analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, the Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Darrell Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Darrell takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
All right, folks, welcome on back here to the Diagnostic Trading Hour. And we're going through, we're looking at a few different things. Let's see here. Let me update this one. Okay, there we go. I just want to get all my little news plans updated, ready to go. Okay. And putting all that in for you so that way we can pull it up and walk through it. Before we dive into the news, to wrap up the volatility indices, there's a whole list of these that you can check out. And they're real easy to get to. Just hop on over and just type in CBOE, okay? And then you can just Google CBOE volatility or CBOE volatility indices, and you'll get a whole list of them. And they got ones for, you know, obviously the S&P, the NASDAQ, the S&P 100. We got the Dow Jones. We got the Russell. You can also go down. You got 10-year Treasury notes, interest rate swaps. You got Amazon, Apple, Goldman Sachs, Google, and IBM. You got the VIX on the VIX, which has some pretty crazy, cool things you can do with it. But you got stuff on, you know, oil, on gold. So there's a lot of different markets you can check out, and it basically lets you know is volatility, you know, low or high. And when volatility is low, then we expect premium to be cheaper. When volatility is high, we expect premium to be, you know, more expensive, more inflated. And so we can use strategies that take advantage of a low premium when volatility is low and high premium when volatility is high by looking at those and knowing what's going on. Also, we can see what the market's expectations are for movement from day to day. And sort of seeing like where they're going. It's like, okay, well, volatility is dropping a little bit. on the S&P. It's dropping a little bit on, the Russell. Let's see here. Put this over to dailies. It's a little low on the Russell. We should see it go down, by the way, when the market goes up. Volatility is increasing a little bit. Option demand is increasing some on gold. So there's a little more volatility expectation coming in. It dropped down, but came right back up, had a big week day. And so you can start seeing that. You'll start pulling it back. And like I talked about, putting moving averages and everything on there. If you go back and watch the show I did a couple weeks back where I dove into the volatility indices and how to use them, they can help you know what kind of binary strategy you want to focus on. They can help you know what kind of option, just standard, vanilla option strategy you want to focus on, what to expect, whether you want to be trending or whether you want to be scalping. So a lot of cool ways that you can use the volatility indices, okay? And let's see here. What else do we got? Let's see here. Going into this is a new announcement that's coming out. Put an article out on this the other day. But let me see if I can pull it up for you. And had a few questions on it, so I figured this would be a good time of the show to cover it and what's happening there. Let's see. Let's see what we got. Going on over here. Okay, so ninjatrader.com. Okay. If we hop on to Ninja Trader, they are now offering Forex as well. So they offer futures at like 53 cents a contract, okay, which is awesome. And they offer FX at basically 0.04 cents like for a mini lot, so 40 cents for a lot, okay? So if we go over, let me show you how this works. What does this mean? One, if you had Ninja Trader for your futures broker, and you had Ninja Trader for your Forex broker, you'd only need a single broker license to be able to trade both. You wouldn't have to buy a multi-broker license, okay? Which is nice. And then you would have two accounts. You would have a futures account, and you would have a Forex account, okay? To go in and look at, what are their costs, what are their rates? So if we go into, let's look at the available markets. They show you the round turn. So if you buy a single broker license, which means you have it for life, okay, including all updates and everything, like E-mini S&P round turn, $3.40. So that's them charging you 53 cents. And then basically the exchange fees are $1.16 each side, and the NFA fee of a penny on each side. Okay, so $3.40 a round turn, not bad. So we'll cover this so you understand the commission fee on futures. Then we'll talk about how it works on Forex and all together. Stay right there. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, Nasdaq, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, folks. Welcome back here to the Diagnostic Trading Hour. We're looking at the Ninja Trader brokerage that now has futures and Forex. Looking on over here at the lifetime contract. If you buy a lifetime license, they give you the largest discount. So, I don't know what you're paying right now, but it's probably not $3.40 on the S&P futures. And you go down here, NASDAQ, $3.40, E-mini, $3.80. Okay, or 380 right there. Yeah, 340 also. So, gold futures, 398. Let's see, crude oil futures, 398. I mean, not bad. So, 340 to 398, a round turn, and that's every fee: exchange fee, NFA fee, clearing fee, broker fee, all inclusive round turns. They list them all over there on their site. So, you can trade futures directly through it, and you also can go in and, like I said, they have the Forex now. So if we go over here and we check out Forex, let's see here, and let's go in and look at the spreads on basically what would it cost. You're looking at a 0.2 pip spread, 4-cent commission fee. So if you own it, so 4 cents, 0.2. And as an example for you, how would that work? You'd add the round turn plus 0.2 pips, so 10 cents. So your round turn transaction cost would be pretty cheap. Going in and going out, you'd be looking at basically like 10 cents on a mini lot, which is equal to a pip. So that's getting in, getting out, all fees included, like a pip, say on like euro dollar. Okay. And that's including everything. Again, bid offer spread, entry exit, commission fee built in, because the bid offer spreads are insanely tight. Like they're at like 0.2 pips. Okay. So obviously putting all that together adds up. So 4 cents times 2, and then plus a 2-cent bid offer spread, which you only pay one time, obviously, would equal 10 cents. Anyways, but you can go over there, you can trade them, and it's really cool. One of the things they did that I think is unique is they actually laid out the margin. Instead of just saying the 50 to 1, like in your majors and, you're like, 25 to 1 on your exotics, they actually listed what would be per 1,000 units of currency. So if you do like 1,000 units of euro dollar, then your margin would be $28. Now, you're only going to make 10 cents or lose 10 cents a tick, okay? So you're probably going to want to be doing like a mini lot unless you really are just starting off. A mini lot would be 10,000 units. So then you'd be looking at 280, okay, to put up in margin. If you did a full lot, you'd be looking at 2,800. Anything U.S.-based, 50 to 1, you're going to be putting up $20, or $200. And now, basically, the whole point here is that what I want you to understand is you can trade Forex now at Ninja Brokerage. You could have futures account at Ninja Brokerage. You can have a Forex account at Ninja Brokerage, and you can have a single broker license there and have really low fees and low cost. So, anyways, check them out. And they also have great customer service, so they can help you out on that. Some of the questions, that come up are, about this is, well, what is the advantage of trading spot FX over futures FX? Okay. So spot FX over futures FX, and the big advantages on futures FX are that you're on an exchange. Okay, so there's no possible kind of party stuff. Now, FXCM is basically ECN, even though they may countermatch. Basically, ECN type FX, and passing it through. Your lots are always going to be 125,000 units, like on 6E, or 100,000 on 6A. You can do 1,000, 10,000, 15,000, 30,000, whatever size you want if you do spot FX. Futures FX will include what's called carry interest rate. Like if you're long Aussie, short dollar, then you'd be going in and you'd be collecting interest rate on Aussies, and you'd be paying out the interest rate on the dollar. So you'd be collecting a little bit of carry over the course of every night. There'd be either an adjustment to your position made or carry interest calculated in. If you're doing spot FX, they're actually going to adjust it. Futures FX, that interest rate is already built into the price, so you don't have to worry about interest and carry and all that. Spot Forex doesn't change from intraday margin to overnight margin. It stays the same. FX margin, you get that intraday break at, you'll basically run a 10 to 1 of what the overnight margin is what you'll get during the day. And then it'll go up past, like 5 o'clock, or that's the CME close. So as soon as CME, the Globex, does a close session, it'll pop up and you'll have that. Now you'll have that holding margin if you're holding it. I'm just trying to go through each, what's the two things on each side. So you got the carry interest that you have on spot FX that's already built into the futures. You have the varying margin, day trade margin versus, initial margin, open margin there that you have on futures. You don't have to worry about that on spot FX. And let's see, you can do various sizes on spot FX where you're basically locked into the contract size of 125,000 on futures FX. They do have micros and they do have minis on the futures FX, but they are lower liquidity. So you're going to pay a wider bid offer spread, and you're going to pay commission on top of that. So it really does not behoove you at all to trade micro or mini, FX contracts on the exchange. You're better off just trading spot. If you're going to trade micros at all, my personal opinion is just to hop over to Nadex, because the margin's about the same. To do an end-of-day spread, that wider spread, your margin can be about the same as spot FX. You don't have to worry about interest rates, and your bid offer, like a tick, couple ticks, no big deal. And you don't have to worry about flash crashes. And you can do sizes, and every tick's $1, so you can do 1, 10, 20, 50. There's really, to me, it's like the best way to do it if you're doing, especially if you're doing minis. But let's see, is it, and I mean, the one big thing, Nadex and CME are exchange-based versus OTC. So, that's really, the pros and cons of exchange versus spot. So there's not, I mean, you're not really making a horrible choice either way, as long as you go with a CFTC regulated exchange or an NFA regulated Forex broker, like, NFA regulates, Ninja Trader, et cetera, Ninja Trader brokerage. So CFTC, of course, regulates CME, regulates Nadex. Don't go like some of these overseas brokers. That's where I'd be really uncomfortable with. There are some other good ones. I mean, there's ones I haven't had an account there, but MB Trading I've heard is good. Obviously, eSignal is awesome. Thinkorswim is great. It all comes down to what you're looking for. If you want those tied commissions on futures, that's one of the big benefits of Ninja. Also, very low margins. So like a 10% of initial margin for day trading is nice. And we just go on down the list. I mean, there's so many comparisons I can give you. But that gives you a nice summary there. One of the things I want you to see is $0 is like $28. So what if I wanted to go in and over on Nadex, okay? And let's see here. Hold on one second. I didn't mean to go there. I need to go directly. There we go. Over here onto the scanner. Let me go in. Let me pull up the $0. Okay. And just say, you know what? I want what contract do I want to look at? Okay. I'll say, well, I want ones that are within, really I want 5, I want to say 10 ticks of the underlying market. Okay, that's immediately going to shorten a lot of stuff down. And then I can say, I only want stuff that's like, basically end of day. So since it's so late in the day, I can just say 60 minutes at the moment. And then that's just going to give me a couple choices, okay? Well, obviously, I don't want stuff that's only going to make $5. So why don't I go up here, and here's the rule of thumb I've learned, all right? Let me pull this up in Excel, and I'll show it to you, okay? So very simple, helpful tip. Let's say it's, let's say the bid offer, or the floor to ceiling is 100 pips wide. Okay, so spread, width. All right, 100 pips. You're basically going to get optionality in that first 30 pips and the last 30 pips. Okay, 30%. So like optionality. Okay. That middle 40% basically mirrors the market. Okay. So understanding that, and let's say I'm buying like somewhere in the center, then ideally I want there to at least be, I want to really be able to take advantage of this 40% right here. Okay. So let's go over here and look at these and go, why would I want the wider spread? Well, 100 pips wide, I basically, as soon as I move up about 20 pips, I'm going to hit optionality. The thing's going to slow down. Okay? But look at this one. I mean, that's pretty freaking fantastic, actually. I mean, it's only 4 ticks from proximity, $19 risk. Okay? $229 prop potential. So it's going to pick up pretty fast. But if I'm in that middle 40%, here's your ideal spread right here. That's the best spread. Okay? Out of all the spreads. Now, this is if you don't want to use a stop loss or something. But if you want to just use a simple, normal trading like FX, $0, $200, controlling 10,000 units. That would cost you $280 if you were doing 10,000 currency units, which would be $1 pip. Okay? So it's $80 less. You're in that middle 40%, right? So what do I mean by that? Well, if I go here and I say, okay, well, let's do the same thing. We got 600 pips wide. Okay? So what's that times point, we'll just say 3. So 180 up, 180 down. The middle of that is, let's see, we got that. Put this formula in here. What we'll do is we'll say that minus this plus this. That's going to equal our middle pips there. So if I can get that right there, if I can get it somewhere around 180, 200 bucks, that means I got a couple hundred pips, like 240 pips of movement in my direction either way. Okay, I mean, I could just buy or sell this spread all day long. That's the only spread I even need to use without having to run into optionality. I only need that one spread all day. By the way, that spread started at 6 p.m. last night. So when I say all day, I mean all day. There's only one spread I need, and I can trade with that one spread all day long and not worry about optionality, not worry about what's the right spread, and I can trade just like I'm trading the Forex market or just like I'm trading the futures market. Obviously, if I want to do size, I can do 10 to make it like a full lot, okay? Or 25 to make it like a euro-dollar 6E future, okay? Notice the proximity is only 2, which really doesn't matter until you get to expiration, okay? So don't even worry about proximity as long as it's lower than really 5 to get to expiration. So what are some of the tips? How can you do this? Well, you really need to look at each contract, because if you can't just choose a minimum profit or you'll sort of mess yourself up. But we can do, like, say I want a proximity of 5. -5 to +5, okay? And then, let's see, what do we need to do? We can go in here and say, well, those last 180 pips aren't going to help me that much, so how can I sort of rule those out on that super wide one or whatever? But I can go in and go, well, what my risk-reward ratio? If I say 1-to-1, that's too tight. So let's say I say 0.5. At least I get rid of the really stupid stuff, okay? Over here, so now at least I have stuff that, potential, like these 4 potential possibilities. So a very simple way is just to go -5, +5, 0.5, and then I want to get rid of the ones that are expiring later in the day. So I want to go, there are ones that aren't expiring until the end of the day. I only want to see like 3 o'clocks. So I will have to adjust this as time goes on, right? So if I leave it on 60 minutes and at 6 o'clock, well, I won't see the ones that expire at 3 p.m. So you'll need to adjust this occasionally as time passes by. But those are the only contracts that are an option. This one is the best option. It has the closest proximity, has the most profit potential. Now, if I don't think it's going to move more than 50 pips, I could use this one, okay? This one and that, basically those 3 are the same. If I don't think it's going to move forward, but if I'm wrong and it takes off, then, hey, I miss out on a lot of profit. And there are times it does take off. This one will move a little bit slower, and then it will speed up. But since we're so close to expiration, that's why that proximity is so low, that you'll see it move more like at an 80 or 90 delta, but then it'll pick up pretty fast. And then we'll close out, be able to go in and use this one, though, all day long, which I think is what makes it easy. If I can just buy and sell that contract all day. All right, stay there. We'll be back right after this break.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy. A set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Alrighty, folks, going back here to the Diagnostic Trading Hour. So I basically was going over, hey, here's how you do futures, here's benefits of futures. Here's how you do Forex, here's benefits of Forex. Here's how you do Nadex, here's benefits of Nadex. And I know so many people will just shy away from the spreads because they don't seem as cool as the binaries. Or they're like, I'm just going to stick with futures. Or I'm just going to stick with Forex. So, or they come in incorrect because they have this whole binary mindset of it's all or nothing. And it's like they see $200 risk and they're like, whoa, that's too rich for my blood, you know, because they like risking like, you know, $40 a contract. I'm like, well, if you're getting out with a stop loss of 20 or 30 or 40, it doesn't matter what the max risk is. I mean, crap, on a future, the max risk is, you know, $140,000 value down to zero. Okay. It's where you get out. That's your risk. Okay. That's just your worst case risk. So just, you know, go in, use a stop plug in, and hop out if it moves X ticks against you. Trail your stops. Well, how do they work on profit and loss? How do I figure that out? Well, if you buy at one price and you sell at another, the difference between those two prices is $1 per tick. They always tick in increments of whatever the last digit is. So the last digit is 0.1, they tick in 0.1. If it's 0.0001, they tick in 0.001. If it's 1, like the Dow, it ticks in 1. Subtract the entry price from the exit price, divide it into a whole number, okay, like divide it by 0.1 or 0.001 or whatever, multiply that times $1. So how many ticks did you get? I made 25 ticks. Well, you made $25. I lost 10 ticks, you lost $10. Very, very simple. Okay? It's easier to trade than binaries. It's actually not even hard to understand if you'll focus just on those end of days. Doing that close proximity like I teach, because you'll get rid of the optionality. So you can wipe out the optionality. You can wipe out the complexity of choosing expirations. You can always just choose like one contract to buy, one contract to sell, pretty much for most of the day, if not the entire day. And so when you're buying euro, you buy this one. If you're selling euro, you sell this one. If you're buying Russell, you buy this one. If you're selling, sell this one. Okay? And that right there is my summary for spreads. But I mean, you need to, we'll go back. I think I might start doing some reviews on spreads and really helping you learn how to pick these spreads. But they're pretty simple. I mean, if you get down just to what I'm saying, what I want is I want that wide spread. I don't care if you have a $500 account, okay? You can open it. It's $200. All right? I want that wide spread with the close proximity. What if I'm trading oil or Russell? Let's look at Russell. Okay, I want that wide spread with that close proximity. See, I mean, 70, 200, 300, 500. That makes it real simple to worry, doesn't it? I want that one. That's it. Okay, that's the spread I want. Now, you could choose this one if you really wanted to, but more prop potential. I'm going to go with that one. Okay, remember that whole thing I said, like top 30%, bottom 30%, optionality kicks in. I want to stay out of that zone as long as I can. I want that full throttle speed ahead. What if I'm trading oil? Okay, let's look at oil. It's closed, so can't trade it. Well, it shouldn't be. Oh, there may be nothing that qualifies right now. Man, it moves so much. Let's see. Where's our wide spread? We gotta have something. There we go. I don't know why. Oh, because I had that percentage thing in there. Well, see, our proximity should match. So if we say -5, maybe it just took a while and I wasn't patient enough. So 5 to 5. Okay. And then let's go in and say that risk-reward ratio, again, is at least, what do we say, a 0.4 at a bare bones minimum? Okay. And then just find that wide spread. You can do the 500 or 1,000, by the way, on this one. $340. Put that up, risk $30 or $40 in the trade. Trade $1 a tick on oil. Okay. Proximity of 0, 1, 2. Easy. All right, we'll keep going. We're going to go over this again more on Thursday, so make sure you tune in then. Y'all have a great day.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. You're watching Tiger TV.